Hi, and welcome to our March newsletter. As you may see behind us, we have an online draw coming soon in our social media tomorrow. So please enter the draw, and we look forward to picking you as one of the winners. As usual, let's start off with the interest rate rise. There was a rise of 0.25%, and there's been a little bit of a panic around at the moment. One more rate rise is expected. That's what the general consensus are. Okay, so firstly, how does it affect you? So if there is 0.25% interest rate rise and you've got a $700,000 loan, so you'd probably be paying around $145 extra each month. So just be mindful. That's the number before you panic a lot. Okay, $145 each month. Okay. Now, what options do we have when the rate rises? Obviously, I think we discussed this in the previous newsletter as well. We have the option to fix our loan. We can fix our loan if you want that stability, or you can just go with variable as you go. If you want to fix it, the easiest way is just go to your app and just check your fixed rates, and just you can fix it. Otherwise, if you're not sure how it works, just give us a call and we can guide you through. Okay. Yes, everyone's worried about the war around us, and what's coming in terms of the new political agendas, but let's just be positive. We can control what is in our control. Try to not be too worried about things that are not in our control. As long as you're doing the things right, you're doing the basics right, I don't think so we should have too much of a problem going forward. Though this is one question I do get all the time from all my clients around: why is the RBA rate lower than your home loan rate? The Reserve Bank of Australia cash rate is just the base rate the banks borrow at, and not what they lend to you. Banks then add their own costs like funding cost, the risk margin, the profit margin. So even if the RBA's rate sits at around 4%, your loan might be at 6%. RBA sets the directions, but bank sets the price. So I hope that explains it. If you've got any questions, because sometimes when a newsletter comes in, at least soon after the RBA rate rise, you can see like it's a 4.1, but you're sitting at around 6%. So that's the reason of, I think the RBA banks actually put on a margin on there and then provide you the rates. Okay, that's one thing. The other one which I'm getting, again, I said with the rate rise, rates are rising. So how do we control it? Number one, keep the payment. Number one, keep the repayments high. When the rates dropped, I think we did request some of our clients to not reduce the repayments. So if you've done that, I think you are quite in a comfortable position right now. So if you just make smaller repayments ahead, you're always ahead of time. So that should help you. The next one is review your rates from time to time, and if required, fix it. Look, all the banks are very competitive at the moment, so they are providing a decent variable rate. But if you need to fix it, you can do that. Again, if you're not sure, just give us a call. The other one is cut bad debts. So things like credit cards, personal loans, try to reduce that as much as possible. And if not, look on debt consolidation. The next one is check your spendings. So even if you just don't go out for a family meal every month, that will help you cover the rate rise. It's not that bad, but again, check your spendings as you go. We cannot control the Reserve Bank of Australia, but yes, we can control all the things which we just discussed. Cool. So yeah, besides that, we are being quite active in social media. You might be seeing us. So do follow our business page. If you want to know more about me, please feel free to follow my personal page as well. I'll put some link below, and I'll share some information. If you like it, give it a like, and yeah, we will see you around in the next month in the April newsletter. Cheers. Have a good one.